Hey everybody, this is the Focus Fender and I'm coming to you with a really quick video answering some questions that I've been receiving on YouTube in my various investing videos, and I figured I can definitely type the answer below and that one person can get the answer, but I might as well record these answers and share it with you guys. But first, if you're new to my channel, I would love for you to subscribe. My channel is all about getting out of debt, staying out of debt, organizing your personal finances, and increasing your net worth. So let's get started. Okay, so the first question that I have is, do you recommend automatically adding the money every week or so, and what percentage of stocks and bonds is advisable when starting? So this person was asking a question about one of my betterment videos, and they want to know, should they basically auto invest and add money every week? And my answer is absolutely. The whole point of investing and auto investing and adding money every week, every 2 weeks, once a month, is to take advantage of dollar cost averaging. So you basically want to make sure that you are getting the best possible price for a stock or a share in a company. And if you just make one investment, you might make that one investment when the price is really high, and then automatically the price dips down and you're like, wait a minute, did I make a mistake? Should I get rid of the stock? No, you want to make sure you're buying, when the price is high, when the price is low, and it's going to eventually even out to the actual price that the company is actually worth. So yes, do invest every week, every 2 weeks, and it doesn't have to be a lot of money. It could be, $10, $50, $100, whatever. Every little bit helps. And the second part of his question was, what percentage of stocks and bonds is advisable when starting? And so I really think this really depends on a few things: how old you are and what your goal is. So let's say you are 25 years old and you are, you're just starting out with investing and you're not planning on buying a house anytime soon. You just have extra money, or not extra money, but you have money that you don't basically need to use in the next 1 to 2 years. I would say 90% stocks, 10% bonds. And honestly, you could even do 100% stocks at that point because you're young and time is on your side. When you're a little bit older, when you're closer to when you're like 35, 45, you might want to start scaling it back a little bit, but not that much. And by the time you hit like 45, 50, then you really want to start thinking about scaling it back and doing less stocks and more bonds, because you're closer to retirement and you're going to need that money much sooner. And also, let's say you want to invest because you are looking to make a purchase in the next 1 or 2 years, then you really want to create a safety net account, and you can do that in Betterment, and it could be 60% bonds, 40% stocks. So your money has an opportunity to grow, but you have the stability of the bonds keeping your account even. So somebody asked, I think this was on my Vanguard video, why haven't I invested in this S&P 500? And I don't think I haven't shared all of my investments. I do have like one other investment account that has, actually I have two more. So I have my retirement account and I have a traditional IRA. But in my Vanguard account, I have a fund called the Total US Stock Market, which is very similar to the S&P 500, which basically tracks, the US stock market. So I am going to look to adjust a little bit, but I do have something very similar. So another question was, how has your Betterment fund fared with the market being volatile? And that is an excellent question because it's been a rocky 2 months or so with the trade wars with China, with the midterm elections. People just don't know what's happening, and that makes investors very nervous because they don't know if laws are going to change. So then they start selling off, and then your investments overall go down. Now, the key to remember is that it's not just your investment that's going down. The market is going down. The market is going down because investors are worried, but the market is going to go back up. So I didn't pay too much attention. I definitely logged in on a regular basis to see what exactly was happening, but I didn't sell anything. And now my accounts have started to go back up. So my profits for Betterment when I did my last video, we were at 20% over the past 3 years. Then, you know, everything's happening. It went down. It went down to like 14% profit, and it's starting to build back up. But I'm not worried, because as I automatically invest every time I get paid, I'm basically buying shares of my ETFs on a discount. And when everything turns around, because even if it doesn't turn around today, tomorrow, next year, it's going to turn around eventually. I'm going to have even more shares in my ETFs, making my account even better than it already is. Okay, so another question. Just open up a Betterment account. I'm thinking of putting in 4K. I put in 1K so far. Can you explain how dividends work? Does this happen through Betterment too? So thinking about what a dividend is. A dividend is basically what companies pay you just for owning stock. And it's based off of the number of stocks you have. Or actually, it's based off one stock. So let's say you own 10 shares of Apple, and Apple says for each share that you own, we are going to pay you $1. So that is your dividend. $1 is your dividend. So you own 10 shares, regardless of how much those 10 shares are worth, on a quarterly basis. Because you own those 10 shares and one dividend is $1, they're going to pay you an additional $10. So with Betterment isn't the one that's paying you the dividends, it's the companies that you're invested in that's paying the dividends. So it happens automatically within Betterment, because the companies that, you know, are in your ETFs are paying dividends, and so it automatically gets reinvested into your accounts. So in my last update video, I added up how much I received in dividends that year or overall, and at that point I had received almost $1,000 in dividends. So it automatically gets reinvested into your account, and it's a really great way to help grow your investment account and just have passive income. Like, it's passive income, it's not coming to you, but it's making you overall more wealthy. So another question about Betterment: what is the minimum investment? There is no minimum investment. I opened my account, I had $0 in it for a whole year. Account stayed open, and then I think I started out with $100, but I probably could have started out with much, much less. So there might be a minimum investment of like $5, but it's minimal. And another question, the last question I have is, do you have a Robinhood referral link so we both can get free stock? So when I first saw this question, I thought, what is she talking about? I don't have a Robinhood referral link. And then I went back on Robinhood and I saw that I do have a referral link. So if you want to sign up for Robinhood and get a free stock, you would get a free stock, I would get a free stock. I have left that referral link in the description box below. Those are all the questions that I'm going to be answering today. If you have any questions, definitely leave them in the comment box. I'll respond to you, and maybe I'll do another video just like this. Thanks. If you like this video, be sure to click thumbs up, share it with your friends, and I will see you in the next video. Thanks. Bye-bye.